Welcome everyone to this week's episode of ThinkTank Thursday. I am Candy and excited to be spending this time with you. On Thursday, Trainertainment likes to get away from all of the doing that there is to be done and spend a little bit of time thinking. And I know we're in the busy season for all of you guys, and so thank you for taking this time and spending it with us. We have a great guest from one of our sponsors today. She is a repeat. She's probably my most repeat guest, but there's such great information. But before that, I need to thank all of our 2021 digital sponsors. You see them on the side there. We are so thankful for Expert Hosiery and Embed, Redemption Plus, Zimnox, Hagar Communications, Party Center Software, Creative Works, Schaefer Distributing, and today's guest comes from People First. So on to our guest for today. Take a few minutes, tell everybody who you are and what People First does.
Hi, everybody. I am Barbara Flynn with People First. Happy to be a sponsor with Trainertainment as well as a team member, part-time, but a team member. And we provide payroll, human resource services, benefits administration, and bookkeeping services. We do probably a little bit more than just bookkeeping. We're not CPAs, so we don't do tax returns, but we do help people in planning and analyzing their books and their various metrics. So that's a fun part. I love doing that part. And I love HR. I love helping people. I love solving problems. It's just a passion I have. And obviously, I am the founder of the company, and the name I chose was People First. And I always tell people, I think that says it all.
A little bit of trivia for People First. People First was started because you were working for somebody in the industry who was utilizing these services, these skill sets of yours anyway, right?
Exactly. We were working, doing payroll, HR. My background, I have my master's degree in HR. So I had that as well as some financial background. So I kind of wore both hats for that organization. It was multi-unit around the country. And it came a point in time where the providers that we had just weren't providing this quality service that we were looking for and that we expected. And so I joked around with the CEO of the group and said, we ought to just form our own. And that's what happened. We formed People First, and our first 3 years in business was just working for the locations for that particular group. And then the 5-year plan on the third year was for me to then go out and start selling, which is not my favorite thing to do. I said if I wanted to sell, I would have majored in sales. But it was very easy for me to just, with my knowledge and my experience and my reputation, I would say 100% of my business comes from word of mouth, whether it be referrals from other people. We don't advertise at all. What I put on social media is information to show our knowledge that people will, reach out to us because I've touched on something that they're curious about. But yeah, we were born from the Family Entertainment Center. Yep.
Yeah, I thought that. Well, if you guys have been following along, this is part 3 of kind of like a 3-part series where we're kind of diving into financials, we're reporting, is your business on track or not in the world of financials 101. And so we have a profit and loss statement 101, which I'll link in the comments below that you can catch up on. And then we talked about why should you keep the financial records? Like, what does it benefit you? Today, we're going to talk about, okay, I got my profit and loss, which is probably the most important. Got that one under control. I know why I should be keeping financial records, but really, what reports should I be looking at and are the most important for me? And, as a starting out. Now, there's probably an endless supply of reports that you could probably have out there and that POS systems will pull for you and all of that stuff. We're going to narrow it down to like the top 5-ish reports that can give you a picture of your business. Isn't that right, Barb?
That's right. That's right. Right. And they can come from various places. So, but yeah.
So where do you want to start? Well, we talked about profit and loss. So we got to say that when your profit and loss statement is a report that you should keep up with. It gives you a snapshot of where you are. Now you do profit and loss in a couple of different ways. You do have the monthly, you have a rolling one, so I'll let you explain the different ones and why you sometimes keep different versions of the same.
Right. And really a lot of this information does come from your accounting system if it interfaces with your POS. Now, I'm not as familiar maybe as Candy is with different POS systems and her experiences because I've not worked in the field like she has. But for me, my analysis really comes from my accounting software, and I can run different reports. As Candy said, even the profit and loss statement can be run. I like to show like where we are year to date. And I always like to look at my P&L, not a total, but by month. Actually now for my quarterly, I've run it by quarter so we can see how we've done quarter over quarter. But it gives you an opportunity. And as I've said in previous sessions, the P&L is really giving you a look back. It's not telling you where you're going, but you need the information from the look back in order to anticipate and to forecast and project and to set goals to where you want to go. So from the P&L, there are reports that you can generate. Oh, and then the rolling 12 will give you where you are over the last 12 months. It's funny, I was in a meeting this morning and I had somebody say, I don't understand. It said we were at 1.6 million and now we're down to 1.5 million. How could that happen? And I had to explain, well, we're looking at a rolling 12. Yes. So you had a very good month that fell off because you've added, you lost last year's August, and then I forget what months we were looking at, but one of the original, the oldest month got dropped off, and your newer month didn't have as much revenue, so therefore your revenue did go down over the last 12 months.
Yeah.
So they're like, oh, is that how that works? So that rolling 12 gives you a nice picture of where you are over the last 12 months, not calendar year, or it might be your fiscal year may be different from a calendar year. But I also like to see year to date. So, right now we're through September, which is the first 3 quarters, but we have a quarter to go. So looking at our 3 quarters, it's like, okay, what do we have to do to meet our goals or exceed them? Can we exceed them? Are we so close to meeting our goal that we can rock that one and just totally celebrate many percentages over what our original goal was? So from the P&L, there's different journals that you can generate if you track your information correctly. So you could say, okay, how much business did I do in payroll processing? And I can run a report that's really coming from the same data that the P&L comes from, but now it's just going to give me my payroll processing revenue. Or how much have I done in bookkeeping? Or how much have I done in HR consulting? I'm using my company as an example, but if you look at the entertainment world, how much of our revenue is in bowling? How much of our revenue is in liquor sales? How much is in arcade sales, or axe throwing, or whatever it may be? You can, and you would run a journal to see that. And you could also see by month, how did we do? We talked earlier about somebody who tracked their numbers so closely that they could see there was a 3-year trend, that, okay, we know every 3 years our numbers are going to be here. What can we do to offset that? Mm-hmm. And you can't do that without looking at digging deeper into that P&L. So you've got things like sales journals. You've got cost of goods. You can look at your expenses the same way. You can compare payroll. I talked earlier about a 3-pay month. Do you know if you're a biweekly payroll that twice a year, if you're not, there's certain ways you can overcome that. But if you report what you expensed in payroll in a particular month, 2 months out of the year, your payroll is going to be 1/3 higher because you've got 3 pays in that month. And that, if you anticipate when those 2 months are, you then say, okay, what do we have to do in this month so that we're not in the negative, or we're not in the hole? Now, there may be other months that you can make up for it, but I kind of am weird. I do not want to have a negative month at all. So I make sure we do whatever we have to do on those 2 months. I'm already looking at 2022, where the 2 months going to be in 2022. So we can anticipate what work can we do in those months to offset the 3-pay month. So expenses, you can run journals for expenses. Accounts receivable. How much money do people owe you? How old is that money? How old is, what's the timing on how old your oldest, money due you is? Is it over 90 days? Is it over a year? how likely are you going to be able to collect on money that someone owes you from over a year ago? So then you want to start looking at that, your accounts receivable, it's called an aging report, and you set a goal and you say, I don't want anybody to ever get in that 90-day column. So I'm going to say, hey, guys, you're 30 days late. You got to pay us. Hey, guys, you're 60 days late. I'm going to have to stop doing whatever I do for you if you don't pay me, so that you don't ever see them in the over 90-day column. But those are things to look at. And then the reverse of that is, what do you owe? What's your accounts payable, right? Who do I owe money to? Do I want to be that customer of my vendors who has a reputation of paying 90 days late? How does that affect my business? Are someone going to really want to refer to me if I'm not paying my bills on time? So that's another report that's critical, and it needs to be tracked. It's garbage in, garbage out. So you want to make sure that you've got folks who are doing that entry work, that's doing it and understands the outcomes from the result of what they're putting into that system.
Also, if there's, like you were talking about, the 3 pay months, if there are things you pay on a yearly basis, and like this one's paid in October, this one's paid in November, like whatever, membership dues or software subscriptions for the year or any of that, and that those are going to be due in a certain month, then by keeping up with that, then you're going to need to cover that in cash flow for that.
For cash flow, but what some people do not do, and I do, is if I pay for something and it's for 12 months, I spread it out over 12 months. So I might pay for something in October, but I'm only going to record 1/12 of that annual dues in October. The rest goes on a balance sheet. I'm getting into the financials now, but it's how you can properly report your actual activity. And so, if you've got something that costs you $12,000 a year, do you want that $12,000 to sit on your October financial?
Probably not.
Or do you want to say $1,000 in October and in each month for 12 months?
Got it.
Because whatever if I've subscribed to Zoom or I've subscribed to Microsoft Office,
yeah.
You know what I mean? You get a deal if you pay a year subscription as opposed to your monthly.
Well, a lot of times with the technology, it's like a 20% savings if you'll just go ahead and pay for the year up front.
Exactly. So let's spread it out over the year, and let's not show that we had this huge loss in October because we paid for an annual subscription for our software.
Now, for clarification for our audience, a profit and loss statement and an income statement are the same, just two different terminologies that, depending on who you're working with, may use, correct?
Yeah, correct. Okay. Yes.
So beyond that, there is a balance sheet. What's a balance sheet? Why would I use it?
Well, a balance sheet is something that gives you a snapshot of the moment in time. It's like taking a picture of your business on a specific day at a specific time, because it changes. It's your bank account balances. It's your credit card balances. Those are things that are not expenses or revenue. They're what you use to buy things and to receive, money for the services or products you've provided. But the balance sheet it's actually the formula of a balance sheet is assets equal liabilities plus equity, right? So assets are all the positives. It's the bank accounts. It's what you're owed. It's your accounts receivable. It's your inventory. Inventory is your cash equivalent. It's any property. It's all of your assets that you have. You may have bought property, or you may buy a building or furniture that are high dollar numbers. I mean, you're not going to go and put a $200 printer on your balance sheet. That's an expense item. But larger cost items that the IRS doesn't even let you expense on your tax return in a year, those are all your assets.
Like if I needed a vehicle, I come from the South, so a farm and a tractor is an asset. It just decreases in each year.
Right. And the IRS has schedules. Again, I'm not a CPA, but I do know that the IRS has schedules that tells the CPAs how many years they can depreciate that tractor or the car or the building or whatever the case may be. Your liabilities, which is the other side of that equation, are the things you owe. So it's your accounts payable. If you pay sales tax, whatever you've collected in sales tax is sitting on the balance sheet. Payroll taxes are on the balance sheet. Any loans, credit cards that you have. So anything that you owe, the mortgage, if you bought a building, you put the building as an asset, but you have a mortgage on that building, that's the liability. The day you buy it, the building, the asset and the liability are equal. But after a while, you may be depreciating the building and you're going to be paying off the loan. So those numbers go down. Equity is what the owners put into the company. And equity can be the stocks. It can be, I lost track of the word. It can be the net income for the current period of time. And it can also be retained earnings, because it's not smart for an owner to take all of the profits out of the business every year. Some should be left in, because you don't know what your cash needs might be in the future. So retained earnings are any earnings that you've kept in the business that you've not distributed to the owners or to, you know, as part of expenses. Some people may look at the end of the year and go, hey, I have a huge net income. I'm going to pay bonuses to my employees. They may be looking for ways to reduce the income because of the fact that they don't want to pay taxes. So they do other things. They may start up a 401k plan. But again, these are reports. This is information that you look at to make decisions, to base certain decisions on.
Got it. Now, that's a balance sheet, which, say that formula just one more time.
Assets equal liabilities plus equity.
Okay. And then what about a cash flow statement?
The cash flow statements just tells you the uses, sources and uses of cash. So what came in and what went out. And it shows you receivables, it shows you bank balances and all of that. To be honest, I don't use that much. Mm-hmm. To be honest, I don't look at it at all. Shame on me. There might be some information I could look at that and look at to make other decisions. But I've got enough information that I get from my P&L and my balance sheet that helps me with my metrics and my weekly scorecard that shows me what I have to do to reach the goals I've set.
I will say at Turner Entertainment, we have used the cash flow balance report to say if we maintain a positive of a certain dollar amount for X number of months, then that's like a lever that then we look at and then allows us to do X, Y, Z. Like it's like, oh, we want to do this. When can we do that? Okay, we need this amount of the cash, you know, like for so many months. And if we can keep that, then that gives us permission and we're safe to do this thing that we want to do. Right.
And that, when I would look at that, I would say, what's my bank balance every month after my expenses? And if it's growing, then I know I can do that.
And I have been to seminars before. So although look for information about cash flow if you want to out there for the audience, because I've been to seminars where people are much bigger about cash flow and how much flow that they have and using other people's money and like all of that stuff to help them grow their business. But again, you've got to know what your goals are. You got to know where you're starting from and all of those things as well.
And that's great, but it's a very seasoned, sophisticated business owner that looks at that. Mm-hmm. I think the majority of our audience, if they could do the P&L and the balance sheet and all of that, I think they will see growth. They will see positive results. They don't need to get, don't get me wrong. There may be somebody who could argue with me on listening to this, but knowing who my customers are, some of my customers don't even know what a P&L is.
Yeah. Well, also a lot of our audience does not have like accounts payable or any of that. And that makes the cash flow a little bit less important as well. Right. So profit and loss, most important, then start looking at what your balance sheet is, where you're sitting, that give you a snapshot in time. Let's go up a tier, not that high tier like a cash flow, but creating budgets.
Right. And there's different ways you can, there's a zero-based budget where every year you start over. I feel like, I like to look at the trends. So for me, when I do a budget, I want to see what I've done over the last 5 years so that I can say, okay, this is on average what we spent in these different areas. And you can also see the trend where it's growing. So Okay, like we did not ever spend any money on sponsorships.
Mhm.
And so because all my referrals come from word of mouth. So we dabbled in sponsorship this year. So we now have a marketing budget that we really never had before. So for 2022, we're going to look at that and say, where do we want to spend our money in 2022 as opposed to where we spent it in 2021? And so while you could have just increase everything by a percentage, you could look at line by line and go, okay, where are we going to be? You look at payroll and you go, well, on average, I want to give 3% increases, or we're going to have a pay freeze for 2022. You look at each individual item and if you use QuickBooks, you can enter that budget into QuickBooks and it will show you how you're trending compared to your budget. I typically do it in Excel. We're having our quarterly on Friday, and I've got my budget done in Excel. I downloaded information, my P&L from QuickBooks, and now into an Excel format, and now I'm tweaking it for the budget to see how we compare to what we actually did for the first 3 quarters of the year. But a budget helps you, meet your goal. Again, it goes back to the goals. Like, I want my bottom line. My goal for 2021, because of 2020 was kind of a train wreck.
2020 was 2020.
For all of us, it's going to have an asterisk by it for many years to come when you look at numbers. But we did have negative months in 2020. And so in 2021, when my business coach said, I want one goal that I want you to write down right now for 2021. And my goal was to not have a negative bottom line in any month in 2021. Mm-hmm. And so that's what I'm working towards. And so I couldn't do that without a budget, because I need to know what am I going to be spending to know if I'm going to make that goal each month. Because sometimes you don't know what revenue is going to be. Yes, you have some residual income, but there's other income that's unknown. You don't know. I don't know when somebody's going to call me and ask me to write a handbook for them.
Yep.
I know that I teach and I get paid. People first gets paid to teach. So I know I have the teaching income coming in and I know what that's going to be. Payroll's residual. So I kind of know what payroll's going to be, but I also don't know if a client might have a huge reduction in force or a client who's going to open another location. I have one client now who's opened one location already in 2021. He's opening a second one in 2021. That's more revenue for me, but I didn't know that because I knew it because we share and I'm his CFO, so I know what he's working on. But I couldn't plan on that when I did my budget for 2021. I didn't know his plan was to open another one before the end of the year. So, but a budget helps me know what the trend was, what I would like to see, and then both from a revenue perspective and also from an expense perspective, and say, okay, this is what payroll is going to be. I offer benefits. This is what my benefit cost is going to be to my staff, and all of those things. And then I can see what do I have to absolutely make in order so that I don't have a negative bottom line.
Now, you said you do not do it, but will you give a quick definition of what a zero-based budget is?
You list all your sales and all your expenses, and then you say, okay, this year my sales, I don't care what I did before. This year my sales and this is going to be this. And you're starting with 0.
Okay.
Whereas I use whatever I did over maybe a 5-year trend, and then did it increase gradually? What did it increase by? I might increase certain items by a percentage and say, okay, I want to see payroll. I want to grow payroll we usually do by clients when it comes to payroll. So we wouldn't do a percentage there, but maybe in billable hours. We may say, let's do 10% more in billable hours. On average, what do we bill per hour? So how many more hours do we need to work? Do we need to hire somebody? I mean, you have to look at that too. We were trending really well, and then we saw that we were getting so busy, we needed to add a staff member. So our bottom line isn't as large as it was before we added a staff member because we've increased payroll.
Yeah.
But we didn't increase payroll until we knew we were trending positive enough to cover that payroll.
Of course. I know a budget can be intimidating. So, for the basic audience, which our audience is mainly like family entertainment centers and such, you don't have to budget every single line item. Look at your big categories is what I'd look at. Like one example I'll start with, and then I'm sure Barbara will have some other examples, is discounts. Do you have a budget number that you don't want to exceed in the amount of discounts that you give in a year? It could be based off historical. I always say based off historical. So let's say you don't want to exceed 6% for the entire year in discounting. And so you can break that up. And how much is that in dollars per month that you are giving out in any type of discounts? It can help you with the way you do your marketing or comps or any of those things. You can subcategorize it, but then you're not exceeding your discount budget percentage. So that's kind of like an example.
Right. Well, and let's say, I know in Trainertainment, we would have our meetings and Beth had this idea that she wanted to do something. And do we have that in the budget? Mm-hmm. We would budget for things. I did the budget for Trainertainment for a couple of years, and we would look and we say, do we have that money in the budget to cover that? Can we do another trade show? Do we want to exhibit at another trade show? We would sit down and we go, let's have miscellaneous trade shows and let's put this much in the budget. Our audience would be looking at, maybe we're going to go to certain, local community
sponsorships.
Events.
A lot of our small businesses get, they get asked, would you like to sponsor this Little League team or this school or this here?
Or the sign on the fence by the football field at the high school or whatever. So you're going to say, what do we want to do? And sometimes it could be a percentage. Let's say I used to have a CEO who said that our marketing budget should be 5% of our revenue. We should just say that's what it should be. And that was in the entertainment business. So, maybe a little nugget you got there, but did we ever do 5%? Did we, when we ultimately looked at marketing at the end of each month or quarter or year, we never spent that, but yet we budgeted for it. And it was like, we need to spend it correctly that will generate business for us, not wasteful, but that should be a budget that we focus on and not say that we're not going to spend that. That's where we're going to save. We're not going to spend what we budgeted. So, that's in marketing to bring in business. What are some, then you've got utilities. That's a big one, but you kind of know, let's face it, in these large box buildings, I know in Florida, the electric bill was like the cost of a house monthly. But what are those? And knowing what's going to happen, are utilities going to go up? All the different, like we talked about earlier, dues and subscriptions to all the different software that we use. I'm at a loss for I'm trying to think of all the different line items that we would use when I was at the family entertainment centers.
You definitely have a labor budget. What percentage you would like to stay at for labor, and then based off the amount of sales that you're projecting each one of those months, based off of historical trends, that gives you, if you know that you want to hit a 30% or less in labor, and your sales are going to be a certain number, then that tells you how amount of payroll dollars you have to go out for that.
If you have bonus programs or commission programs too, that if, let's say, you pay commissions on, if you have 100% revenues coming in from commissions, you can easily budget for that, which would fall under payroll kind of, unless they're contractors, but that's a whole other topic.
So yeah, budgets can be, but like I said, you don't have to budget every single line item, but knowing, I think a good one is, like you were talking about those sponsorships, knowing, hey, this is the amount we've allotted for this year in sponsorships and charitable giving. And, another side tip, think about the things that mean the most to you. Do things about families mean the most to you? Are you an animal lover and they mean the most to you? Whatever. And create your pillars of like giving and all of that. So if something comes in and it fits your pillar, you can say yes to it, and you have the freedom to say yes to it because you already know what your budget is for the year and where you are with that. And so
on that note, I have to say one more thing, and that's training. I think training is important for the owner, for the staff. I think everybody should be given the directive that they need to look and see where do they want to grow. I do that with my staff. Each quarter, I want to hear one thing that they want to do in that quarter that's going to help them grow, either in their profession or something that they love to do personally. Of course, business wouldn't pay for that part, but but to have that training budget to allow your people to grow, because those people who are growing in the business are only going to be more of an asset to the organization.
There were 3 lines in my franchise days that I always had my franchisees set up in their budgets. And one was training, of course, ongoing training, because training never, it's not a one-time event, it's an ongoing process. 2 was employee morale, something to retain and, make them part of the family. And there should be a small budget. And a lot of times I would say, let your managers decide how we reward, whether it's a party or whatever. And then 3 was what I kind of called like investment or improvement fund. And so, a lot of times in businesses, you want something or need something, whether it's a new attraction or a new piece of equipment or something, but you may not want to expend that money all at one time. Well, if you're constantly putting a certain percentage of your income into a holding fund, so when you do need a new attraction or a brand new, really good printer for something, it's there. You have this fund that is for improvements, ongoing improvements within your business. And so those are some items to think about. What about a bank reconciliation?
Yeah. I just took over an account. I got their QuickBooks yesterday. I got it installed. Whoever was doing their bookkeeping, they've not done a bank rec since 2014. Your bank rec should be done on a monthly basis. In fact, we're doing our bank recs on a daily basis. We, being a payroll company, we do a lot of work where we pay on behalf of our clients. And so one of our clients' workers' comp carriers mistakenly deducted a 5-figure amount out of People First bank account. And while we were doing monthly bank recs, that happened at the very end of the month, and we typically don't get the statement till the 3rd or the 4th day of the following month, and only discovered it a week later. Fortunately, we're okay cash-wise that wasn't it's a major issue, but we made the decision that we're going to look at it every day, because those kinds of things happen. With fraud the way it is now, it should be looked at, but if not before once a month, because that is the only way that it's your check and balance. I always tell people, never use cash. Use a credit card, pay by check, or what, so that you've got some kind of trail. And those trails are the statements, the bank statements, the credit card statements. And then but you're making those entries into your software, whether it be QuickBooks or whatever accounting software you're using, then you've got to make sure you've captured everything. And the only way to make sure you've captured everything to avoid missing a $51,000 deduction out of your bank account is to do the bank recs. And that's when you can discover fraud, and get caught early enough, you're protected. But if you find out that there was something, you haven't done a bank rec since 2014, good luck trying to get that money if there's fraud.
And a bank reconciliation is just the fancy business term for balancing your checkbook, right?
Exactly. And a lot of people don't balance their checkbooks either. Right? They just go and they check, what is my balance today in the bank? I've had business owners do that. Well, there's this much money in the bank, so I went ahead and wrote the check. I'm like, there's outstanding checks. We've got to pay sales tax tomorrow. The mortgage is due. That money is for that. You've now written a check, and now we're going to OD with the sales tax. Do you really want the Department of Revenue coming after you? So it's important to know what the accurate bank balance is, and never go by what today's bank balance is.
Yes.
You want to have some system where you're tracking that, and like I said, I use QuickBooks. Personally, I use Quicken, but there's Zoho has accounting software. There's Peachtree. There's all kinds of, some of the POS systems may even offer, but use them. Take advantage of them, because another way to know ahead of time what to anticipate, like we anticipated once we saw what happened to our bank account, that we now have covered the things that normally would have been paid using that money.
Yeah.
Until we can get the carrier to reimburse us for the mistake they made.
And there's always a time frame for that, so you've got to be prepared for it. So
yes.
Are there any other reports that we haven't talked about?
The budget, the transaction, accounts payable, receivable, tracking expenses and sales using the journals out of your software or your POS system.
Good deal. And it sounds like a lot, but really she just listed only about, I think, 6, if I counted correctly.
Yeah.
Yeah.
And if you're doing your data entry, all of those are reports that you get at a push of a button. It's not like you have to do a lot of work to see those reports.
So as a recap in this 3-part series, the biggest lesson I think that Barbara is trying to tell us is do it now. Like, go ahead and track all of those things, enter your expenses, enter your income, like make sure that you have an accounting. If you don't have accounting software, that should be your first step of order. Make sure you're getting one. If you need help, there are people out there like People First who can help you clear this up. So if you're looking at it now and thinking, oh my, I have not done any of this, and since 2014 or whatever it may be. Or if you're starting a new business and you've just been kind of going by the seat of your pants doing what needs to be done to get that new business, well, now's the time. Go ahead and start getting these reports in order.
The day you open the bank account, the day you put money into the business, even if you're spending money on the business before you even start, you should be tracking it.
So even in the idea of the business, like I am researching. Exactly. Yes. Okay.
Because you've got expenses that are deductible. Those are operational expenses that you're spending to start your business. If you don't track them and 2 years later, you're saying, well, I took $3,400 out of the account because I did this, this, and this. Had you started right away? I mean, I know businesses that started in 2018, but didn't start functioning and running and getting sales until 2021.
Especially with everything we just went through, it delayed a whole lot of openings out in the world.
Exactly. Do it from the first penny you spend, even if it's before you've incorporated or formed your business.
Yeah. So if you're researching right now and you're going to IAPA in a month, go
that's a business expense.
All of that. That's a business expense and all of that. So, so as a recap, Barb, I'm going to let you talk about the 3 episodes that we've done and kind of what each episode taught them, and then where people can find you. And then I'll ask you the signature question for ThinkTank.
Sure. So the first segment, we talked about a P&L, profit and loss statement, and what it is, the different components of a profit and loss statement. Mm-hmm. The second session we talked about is why we keep track of the numbers and the importance of them and what they can do for your business, and how you can grow your business using those numbers. And then this episode was on what reports do you look at to get that information in order to grow your business.
Awesome. And that should give everybody a good baseline for starting off this journey.
Yeah. Yes, definitely. And any questions, I am here. I'm with Trainertainment as well. My website is www.peoplefirstinc.com. And I also have an email with Trainertainment, is barbara@trainertainment.net. So a couple of ways to reach me. And always, if you talk to any team member at Trainertainment, they'll know how to reach me as well. So.
Also, follow People First on LinkedIn. They put some nice little tips out there. I think I just saw one about the quarterly tax, payroll taxes, making sure that you're prepared and ready for those. So they make sure you're staying on your toes there. Right. Well, of course, there's the signature ThinkTank question. So what do you do to grow yourself and or others?
Well, as I mentioned earlier, I do have a goal every month, every quarter, to have some goal where I'm going to grow or learn myself, whether it's reading. My growth in the past, I don't know, I guess May, maybe we started writing blogs. Each team member has to write a couple of blogs, and you don't just write a blog without doing research. And so for me, while you may think, well, you're not reading, you're not listening to a webinar, you're not taking a class, but writing a blog, I learn from writing blogs. So another way to learn is to make a commitment to show what you know. And maybe what you don't know 100%, but by a little research, you can do some reporting on it, which will help other people grow.
I love that, because that's essentially what you're saying. By you having a commitment to help other people grow, it in turn is helping you grow.
Exactly.
I love that. All right. Well, I thank you guys. If there's any other financial questions that you have that you'd like to see us cover in a future episode of Think Tank, send them this way, or HR or bookkeeping, any of those types of questions. Barbara will happily come on and answer those questions. So you can send them to me at candy@trainertainment.net. You can also email me and I'll invite you to if you want to be a guest and we can talk about any of the things that you want to talk about on Think Tank Thursday. I want to say a big thanks to our 2021 digital sponsors. If it weren't for them, these episodes would not be able to come to you guys each and every week. And so thank you for your time. We appreciate all of you.